If you're having a comfortable retirement, you might be considering giving your adult kids a cash gift. Not their entire inheritance, mind you, but just enough to make a difference in their lives right now. Like you, I've been thinking the same thing. I'm Beverly Harzog, and I used to be a CPA, so my first thought is, will I or my kids have to pay taxes on it? But when I did the research, I was pleasantly surprised by how much cash I can actually give before I'm required to even report it on my tax return. I think you'll be surprised too. By the end of this video, you'll understand the annual and lifetime gift tax exclusion rules. As a bonus, I'm sharing a few sneaky strategies you can use to give more money to your kids without breaking the gift rules. Let's dive in. The gift tax exclusion is a limit on how much you can give your adult kids without having to report it to the IRS. The gift tax annual exclusion amount before you have to report it in 2025 and 2026 is $19,000 per person. Most people don't have to worry about the lifetime exclusion, but if you're very wealthy, you should take note. The lifetime exclusion is $13.9 million in 2025, and it goes up to $15 million in 2026. If you exceed your $19,000 annual limit, you have to report it on the IRS Form 709, which I'll drop into the description below. And that will count towards your lifetime exclusion. When you go over the lifetime exclusion, you start paying taxes on the amount. It ranges from 18% to 40% right now, and that could change in the future because things usually do. So what if you want to give your kid more than $19,000? There are actually a few ways to do that, and it's called gift splitting. Let's say you're married and you have a daughter and a son. You want to give each one help towards a down payment for homes. Here's how that could work. Spouse A can give the daughter $19,000 and the son $19,000. Remember, the limit is per individual per year. And then spouse B can do the same. Each child gets $38,000, and it doesn't exceed the gift exclusion amount of $19,000 per individual. But what if they need more than that? Actually, there is a way to give each of them another $38,000 if you get the timing right. Let's say your kids need more than $38,000 each for their down payments so that they can have a lower mortgage payment. You can use the gift splitting approach over a 2-month window. In December 2025, give each kid $38,000, and that's the annual limit for the year. In January 2026, you get a brand new $19,000 limit for each of them. So you can gift another $38,000. If you are single with one adult son, you can use the 2-month window approach to give $19,000 in December and again in January 2026. You know, it's fun to play the system a little bit. If you're wondering if the cash gift is subject to the inheritance tax, you can relax. The gift tax is different from an inheritance tax because you're giving cash while you're still alive. So consult with your tax professional if you have specific questions about inheritance taxes. I focused on cash gifts in this video that count towards the gift tax exclusion, but you can also give cash that doesn't count towards the exclusion amount. Examples include college or university tuition, if you pay the school directly, and pay medical expenses for someone. Again, check with a professional if you have questions about expenses that don't count towards the gift tax exclusion amount. If you do plan to give a cash gift to an adult child during the holidays, or maybe sometime next year, let me know in the comments. I'd love to know how you're handling it. Thanks for watching, and I'll see you in the next one.